shorted here, and got covered down here. So, and then this was just the break-even trade from earlier that I closed because it was open ahead of 9:30. Alright, what's going on, guys? Just gonna briefly overview the trade I took this morning in the private live stream. So, as you guys saw in the short clip in the beginning here, right as my order was about to execute, YouTube decided to take my stream down. Not sure what that was, the reasoning, or if it was random, or I don't know. But anyways, starting here at the daily time frame, we can see that we pierced through that old 2021, 2022 high. You can look at it in your own chart, as well as this July high from this year that we made. So, large pools of liquidity being taken out, and now we have this large displacement from yesterday off of that, coming up off of the high, right? Along with this displacement, we have this change in the state of delivery right here below this up close candle. Okay, so below that opening price, that's a change in the state of delivery. And what do? We open, we trade, slam right up to the opening there to do what? Accumulate short orders to the downside. And then I'm going to flip to the NASDAQ quick. Along with us trading up into this order block, we also trade into another lower time frame PDRA. And what is that? Well, we're going to go down to the lower time frames. But first, I want to show what are we going to be reaching for toward in the daily time frame now that all of the premium rates have been repriced to. Well, let's take our price high to low. We want to see fair value. What's fair value? Equilibrium. Okay, so fair value resides at equilibrium, and then we also have this small little gap below this low, which there's going to be sell-side liquidity below these two daily lows, and then we have this inefficiency right here, right at equilibrium, and then this one at discount. Okay, so down to the hourly time frame. So we're trading up into that daily order block, but also we're filling in the upper portion of this large hourly imbalance left behind from yesterday. Where at? Optimal trade entry. So we reach that 62% retracement level, very important. We wick off, work in midpoint of this wick here, okay? And then what are we looking for on the downside? So notice before I say anything, we don't need any of these lower targets to be profitable because we made over 51 handles to the downside today. So number one, we have this sell-side liquidity pool, so this will be previous day's low. High probability drawn liquidity is previous day's lows, previous day's highs. And then that also matches these lows here, so relatively equal. And then just below that, we have new week opening gap where fair value resides. And then we have these relative equal lows hovering above this daily fair value gap that I mentioned just now. So let's go ahead and drop down to the 15-minute time frame. And if you're referencing the opening price here, the midnight opening price down here, you can see that we're clearly in a deep premium. We have that 8:30 news release opening, slams up into this premium inefficiency to do what? Invite liquidity. There's no liquidity up here. They're trading up here to invite liquidity. So they trade up into that optimal trade entry premium, multiple premium arrays. And we also blew out the buy side at these relative equal highs right here. Notice what they did. Notice what they left behind prior to this Judah swing. So this would be known as our classic Judah swing. So you extend out the 8:30 opening price. Anything above that is a rally to low end traders to get long and to accumulate short orders above the opening price. Okay. So with this news release, you can clearly see that they leave behind very clean lows here. So what's going to be below here naturally? A lot of sell stops for those who want to keep on buying along with this move here. Just look how clean they are. Way too clean. Okay, so we have the sell side liquidity residing below here. We also have this discount inefficiency here that was take profit 1 prompted to inner circle members. If you look here, we came up, had a failure swing, right? Let's take our high to low. Had a failure swing at an optimal trade entry level, 79%. We swept the first short-term high made. That's very important. So this sensation right here is all that is needed to send us in a sell program. So we have the swing high right here. Boom, sweep that out. at what? The 9:30 opening. So along with this Judah swing, we have another Judah swing at 9:30 that comes up to do what? Blow out short-term stops, buy stops, and then work in this wick here. So we didn't get quite to the midpoint, but all that matters is that we gravitated towards that. So this sensation right here is all that we need to trust shorts to the downside. Now with that, let's go over to Dow. You can see that Dow clearly at 9:30, that Judah swing made a higher high, taking out this high. We were unable to do so here on ES and NASDAQ. So that's our SMT divergence along with everything else. Before I go on to the 1 minute time frames, I'm going to mark out the levels I was using inversely. Okay. So we have this, and then we have this 5 minute for value gap premium high. Okay. So with that, I'm going to go down to the lower time frame. So what are we targeting? We're targeting a complete closure into this gap here, and then the sell side liquidity residing below here. So let me extend this out. So lots of things taking place here. So we sweep out that short-term high, short-term run on buy side liquidity. So we are due to swing above the 9:30 opening price to accumulate shorts. We have that failure swing with the SMT divergence. So let me just mark it out just so you remember. Okay, so failure swing, and then we get that complete displacement below this initial 1 minute gap formed. Very important. That right there, we have opposing arrays being disrespected right there. We pierce that. And then multiple times we trade into this inefficiency, and I was watching what we did once we reached that, okay? And what did we do? We created that intermittent term high post the 9:30 Judah swing. That is very powerful right there. Using Judah swings, liquidity, and market structure. So the market structure is we made a swing high here off of the SMT, swing high to the left, swing high to the right. That'd be our intermittent term high. And then we trade lower once more, and I'm just kind of sitting through this consolidation here waiting for, more meaningful displacement. So we have the intermittent term high here. We fail to go above this swing high right here, and we traded up into this inefficiency. So immediately in a strong bearish market, we would note this as a 1 minute fractal intermittent term high as well. So we traded up into the inefficiency, and then we have this swing high form here. So we wouldn't want us to trade up here. Okay, so we trade up into what? This up close candle in the inverse 5 minute gap, which is this red shaded area. We trade off of that, create yet another swing high. And as soon as we trade below there, so remember this line? This black line is the 5 minute fair value gap high. As soon as we trade off of that and then wick back up into that high, boom, got short 2 contracts. And what else was I keying off of? Well, let's take this down close candle. It's kind of harder to see since we're in a consolidation, but we have this down close candle here, so we have this high, low, higher high. So this is our 1 minute fractal breaker. So you see how we worked inside of that, and then we traded lower in the low end, wicked up into the low end, and that's exactly when I went short. So getting short here, 2 contracts. We traded off one more time, traded back up into another inefficiency. This may have scared some other people out of the trade, but not me. This is where I added 1 contract. And then simply TP number 1 below the 8:30 opening, TP2 at these relative equal lows that were left behind to eventually be swept. So this is everything I just said here is classified as my A+ trading setup. That's why I used multiple contracts on the NASDAQ. And if you're interested in my A+ trading setup, I have a video titled that, so you can go ahead and check that out. And yeah, I did call out this low right here this morning, but I got out at the sell side liquidity residing below here, and I was content with enough. And clearly, this was the perfect day to be content with enough because we wicked off and just went into consolidation since. Now, one more thing that needs to be pointed out is we'll take a look at this sell side liquidity pool. We'll take our dealing range, and we'll see I went short where? In a premium. Okay, so this is like classic core content ICT. So we're up in that premium range. We're waiting for time to align with price. We got that. And then what is it we're going to want to do above that opening price? Accumulate the shorts to then distribute them down into a discount. Discount what? Sell side liquidity. Then we have this small little gap left behind as well. They want to reprice into that. Okay. So that's everything I used for my trade today. Hope you found this insightful. If you did, hit the like button, and that'll be it.